All right. Hey, everyone out there, all you future IAS officers. If you're prepping for those UPSC mains current affairs, you know we're here to help with that, right? Today, we're going deep on something the RBI just dropped. And, well, it could be a pretty big deal.
It really could, yeah.
Yeah, we're talking foreclosure charges. You know, those penalties banks love to slap on you when you pay off a loan early.
Yeah.
Painful stuff. Guess what? The RBI is thinking about just getting rid of those, waiving them, specifically for micro and small enterprises,
Yeah.
MSEs.
That's right.
And we're not talking small potatoes here.
Right.
Loans up to a massive 7.5 crore. So yeah, you can bet this is going to be the topic for those UPSC economic discussions. And where are we getting all this juicy info? From the Hindu and the Economic Times, of course. Always got to go to the source, right?
Absolutely. Got to stay informed. And what's fascinating here is how this could totally change the game for these businesses, for the whole financial landscape, really. I mean, think about it. Right now, it's individuals with those floating rate loans, you know, the ones where the interest can change, they get a free pass on foreclosure charges.
Right, right.
But businesses, especially our hardworking MSEs, they haven't had that same freedom. This proposal, though, it's all about leveling that playing field, giving them more control over their money.
Okay, so let's get into the nitty-gritty here. What does this proposal actually mean for MSEs?
Well, first off, no more foreclosure penalties, period. And no prepayment penalties either. You want to pay it off early, go for it. No lock-in periods holding you hostage. It's all about flexibility, you know? And maybe even more importantly, total transparency. All fees have to be laid out right there, up front.
No more hidden gotchas.
Exactly. So imagine, right, you're an MSE owner, you're trying to plan your finances. This is huge. You can strategize your debt, repay when it makes sense for you, not the bank. Even switch to a bank with better terms if you need to. No penalty hanging over your head.
Yeah, it's about giving them that power back, for sure. But there's always a but, isn't there?
Oh, of course. There's a little wrinkle here.
A wrinkle indeed. This proposal says nope to cooperative banks and those smaller NBFCs, the non-banking financial companies. They're exempt. Now, doesn't that seem a little, well, unfair? Like we're creating an uneven playing field.
It does make you think, doesn't it? That's a good point. My guess is they're worried about those smaller institutions. You know, they really rely on the interest from loans. So waiving these charges, it could hit their bottom line pretty hard.
Except?
It's a tough situation. You want to help the MSEs grow, but you also need to make sure the whole financial system stays stable. Tricky.
It's a real balancing act, isn't it? And that's exactly the kind of thinking our UPSC folks need to nail. You can't just memorize the facts, got to connect the dots, see the whole picture, the ripple effect.
Oh, absolutely. Understanding the why behind these policies, that's the goal.
Okay, so let's dig into the good stuff. What could this waiver actually do for MSEs? I mean, everyone knows access to credit is a huge problem in India. Could this actually encourage more of them to take out loans? We talk about this all the time, right? Economic Development 101. It's a big part of the UPSC syllabus, too.
Oh, yeah, for sure. Huge. Yeah, absolutely. Yeah, I mean, easier access to credit, that's a game changer for these MSEs, right? And then it just ripples out from there through the whole economy. More investment, more jobs. That's what helps India grow, right? And, well, that's pretty much the whole point of the UPSC syllabus, isn't it? Especially when we talk about economics and social development.
Right, so it's not just about helping one business here, one business there. It's about getting that whole engine running.
Yeah.
But I'm kind of curious, how does this actually help those MSEs who are maybe a little scared to take out a loan in the first place? You know what I mean?
It's all about getting rid of those hidden costs, building that trust. Think about it. Right now, a lot of MSE owners, they're looking at that fine print and thinking, uh-oh, what's going to pop up later? This proposal, though, it forces the banks to put all the cards on the table, every fee, right there up front, no more surprises. I bet that would make a big difference, knowing exactly what you're getting into.
Transparency, yeah, I get that. And, you know, the Hindu and the Economic Times, they were talking about this real problem MSEs have, switching banks. A lot of them feel stuck, even if they're not happy with their bank.
Oh, yeah, that makes sense.
Because if they switch, bam, those foreclosure charges hit them. It's a nightmare.
It is. And that's how those charges really mess things up, you know? They kill the competition, limit the choices these MSEs have. But if we get rid of them, well, that could really shake things up in a good way. Imagine banks actually having to fight for those MSEs, offer better rates, better terms, just better service all around. And who wins there? Everyone. The MSEs, the banks, the whole economy.
Sounds like a pretty sweet deal, honestly. Sure. But we can't forget the other side, right? The banks, the NBFCs. Can getting rid of these charges actually be good for them too? Doesn't seem like it, right?
It does seem kind of strange, doesn't it? But think back a bit. They did this for retail loans a while ago, and you know what? It was a huge success. More people took out loans, everyone was happy, the economy got a boost. So who knows? Maybe doing the same thing for MSEs, well, maybe it'll have the same positive ripple effect.
Makes sense, I guess. More loans, more activity, everyone's happy. But I did see this one report. It was saying, hold on, maybe this could actually hurt the profits for those banks and NBFCs, especially for those loans against property, SME loans, business loans in general.
Yeah, that's a real concern. We can't pretend it isn't. Some of these institutions, especially the ones that rely on that interest income, they could see their profits take a hit, at least at first. It's something to think about, for sure.
So it's like a trade-off, right? Help the MSEs,
Mm-hmm.
maybe risk the profits of some financial institutions.
Exactly. It's complicated, lots of moving parts. It'll be interesting to see what happens next. Will those big NBFCs change their interest rates? Will they start focusing on different financial products? These are the kind of questions our policymakers, our industry experts are all going to be wrestling with this for a while, I think. And for you UPSC folks out there, this is perfect. You got to be able to analyze these changes, explain what's going on. That's what they're looking for.
Oh, yeah, for sure. If you want to ace those UPSC exams, got to show them you can think critically. But let's step back a second, get down to brass tacks here. Even if this is a good idea, even if everyone has the best intentions, could there be some roadblocks? Things that could trip this whole thing up?
You hit the nail on the head. The biggest one, awareness. Are these MSEs even going to know about this waiver? Will they understand how it works, how to actually use it? If the information doesn't get to them, well, the policy's basically useless.
Right. What's the point if nobody knows about it? We need to get the word out, make sure everyone understands, even those MSE owners way out there in those remote areas. Got to reach everyone.
Absolutely. And then there's the whole bureaucracy thing, Is this going to be a simple process, or will they have to jump through hoops, fill out mountains of paperwork? That's always a worry.
Yeah, that's the classic problem with these big policies, right? They get bogged down in all the red tape.
Exactly. It has to be simple, efficient. MSEs need to be able to take advantage of this without a ton of hassle.
So, lots to think about. Some potential problems to solve. And this brings up a really important question for everyone listening, especially you UPSC folks. What can we do to make sure this actually works? How do we guarantee that the MSEs who need this help the most, they actually get it?
Yeah, it's like we're all policymakers now, right? Brainstorming solutions, figuring out how to make this work. That's what those UPSC exams are all about, right? Thinking critically, not just seeing the problems, but coming up with answers.
You got it. And this whole thing about helping MSEs, it's not just happening in India. Globally, people are starting to realize how important these businesses are. They're the engines for growth, for jobs.
So the RBI is kind of following a global trend here.
Yeah, exactly. It's happening everywhere. Everyone's focusing on small businesses, trying to figure out how to make them stronger. Because, when the MSEs are doing well, everyone benefits. The economy is more inclusive, more sustainable. That's interesting. So for those UPSC preps out there, you got to connect the dots, right? See how what's happening in India fits into the global picture. That's how you write those killer answers, those insightful essays.
Yeah.
Shows you're not just memorizing facts, you're really thinking about this stuff.
Exactly. You're showing them you understand the big picture. Okay, so we've covered a lot of ground here, talked about the RBI proposal, all the ins and outs. Let's wrap it up. Highlight the key takeaways.
Sounds good.
All right, so this proposal, it really could change the game for MSEs in India, give them more financial freedom, make the whole lending process more transparent, maybe even create a more competitive market where the banks have to actually work for their business. But, and this is a big but, it all comes down to how well it's implemented, right? We got to tackle those roadblocks we talked about, make sure everyone knows about this, make the process simple and easy, and most importantly, make sure the benefits actually reach those MSEs who need it most.
Yeah, it's not enough to just say, here's a new policy, go use it. You got to make sure it actually works, right?
Yeah.
Keep an eye on things, adjust if you need to. Policy making, it's a marathon, not a sprint.
Couldn't have said it better myself.
Yeah.
And hey, this is where you come in, dear listeners. We want to hear from you. What are your thoughts on this whole thing? Good idea? Bad idea? What other challenges do you see? What solutions can you think of? Hit us up in the comments. Let's keep this conversation going.
And hey, while you're at it, hit that like button, subscribe to the channel. We're diving deep on these important current affairs topics all the time, especially for our UPSC friends out there. All right, that's it for today. We'll catch you next time.